Hey guys, hope you are all doing well and having a good weekend. I have decided to change plans and delay the NFT video I had. The more I look into that matter, the more I discover and the more I realize that a short video will not cut it. There is simply too much information that I need to put together because I want you guys to have a fully realized explanation of that matter. As such, that video will be coming out later this week. Instead, I have been getting request after request on Twitter from people wanting me to discuss a recent post that involves hedge fund manipulation of price. You see, a Reddit user made a post where he discloses and explains with evidence that hedge funds seem to be using odd lot exclusions in order to play around with the price of both AMC and GME. Though this topic has been previously discussed on forums and videos, it appears that there is a great number of people who seem to be new to this. As such, I want to quickly talk about what odd lots are, what their role is in regards to all the manipulation we see coming from hedge funds, and if it is something that we should be stressing about. We're going to keep today's video extremely short because we are only going to be discussing this matter and because the bigger broader video is coming out tomorrow where I discuss a variety of topics and go over what seem to be the more likely scenarios of price movement for both GameStop and AMC. As such, let me put out the disclaimer and say that I am not a financial advisor. I compile opinions and evidence that I find important and of high quality and present them to you guys. Before we get started, I want to thank each and every single one of you for being as amazing as you are. All over the world, interest in GameStop and AMC continues to grow, and I see some of you stopping by the channel and sticking around. Super humbled to have each and every one of you here with me. I cannot thank you enough. Regardless if you stick around or keep moving around to find a better source of information you deem more appropriate or palpable to your taste, always remember that I am rooting for you to keep buying and holding and to keep learning and educating yourself in all matters regarding markets and the worldwide economy. This is bigger than what you are being led to believe by the government and the media, and I strongly believe that proper education regarding these matters will lead to better change and consecutively, a better world where wealth and opportunity are better balanced. I believe in you. Keep educating yourself wherever you go in life, and make the absolute most of yourself. I may not know you, but I have full faith in your abilities to improve the conditions of this decaying world. With that said, let me not waste any more precious time out of your little vacation and get straight into the matter at hand. Let us begin with a quick overview of the markets. Retail traders make up about 25% of the stock market, a figure that jumped about 10% due to the sheer mass of investors quickly hopping in on apps like Robinhood due to the rise in popularity of meme stocks, cryptocurrencies and general financial curiosity that has risen this past year. The events that took place last year have in many ways reshaped people's lives and general attitudes towards money. As such, we have seen an increment in stock market participation coming from retail traders starting in 2020 and that continues to grow. So, one of the fundamental concepts and terms you need to know is market orders. You see, when orders for shares are less than a 100, these types of orders are considered odd lot trades. Round lot trades, on the other hand, are orders that begin with 100 shares and orders that are divisible by 100. One key thing to keep in mind is that odd lot orders, the orders that have less than 100 shares, are not posted to the bid or in data on exchanges. They are typically taken into order books at the exchange that they are routed to. Now something interesting happens with odd lot orders. Typically, odd lot orders can have delays in order to be filled. This is because they are filled when the exchanges are able to match an order from the book. As such, since it needs to match it, they can be delayed. As such, round lot orders, which are the orders with 100 or more shares, are treated with more weight of importance. Given all of this, when detection of round lot orders estimates that there is more stock than buyers, or in simpler economic terms, when there is more supply than demand, the price for that asset or security will go down. When there are more round orders signifying more buyers than there are shares available, or more demand with less supply, the price of that security or asset increments. Essentially, all the computers that do these calculations are essentially setting the bid and the ask that we see. Now, let's quickly recap. Odd lot orders are simple orders that have less than 100 shares. Round lot orders have more than 100 shares. Due to the nature of odd lot orders, they typically experience delays in order fulfillment due to have to be matched on the books. That aside, exchange detect round lot orders and make instantaneous estimates of what the ask and bid price will be based on weighting in factors that take into account if and by how much there are more buyers than there are stocks available, or how much there are more stock than there are buyers available. In other words, the simple economic principle of supply versus demand. Now let us continue to one more key piece of information before we start tying all of this back to GameStop and AMC. Let me introduce you to odd lot theory. This theory simply states that an increase in odd lot activity is a buy signal activity in the market. So, when there is a lot of orders coming in for less than 100 shares, there is an assumption that small individual investors, which are what make these odd lot orders, are wrong because they are ignorant about finance and life in general, and that because of it, they should be punished. As such, the theory follows that when odd lot sale orders are coming in large amounts, it is intuitive that institutional investors go and buy the stock. When odd lot buy orders are up, it indicates that it is the time to buy. This is why when investors start buying a lot of shares at the same time, you see GME and AMC typically drop in price, and it doesn't make sense. It is because a lot of the algorithms used by hedge funds and other members of the market have the systems ready to automatically buy and sell in contradiction and correlation of direct proportion to what individual investors are doing. There is a lot of controversy around this, and some of the data that supports this as a technical strategy also has a lot of flaws that say this is not a good strategy. However, we know this happens and that it exists in common practice. Now, there is a lot of online speculation saying that exchanges are canceling out certain order pressure in the sense that they are manipulating pressures. I think there is a lot of research to be done in this regard, and that simply making such assumptions just because in our head it would make sense when we don't have any real concrete evidence of this is wrong. However, there is one thing that I know to be true, and that it has plenty of weight to support the claim that odd lot orders are being used to suppress the price of GameStop and AMC. So, you guys know how we have been discussing order for payment flow over the last month or so on this channel. The idea is that payment for order flow allows hedge funds to get retail orders and then route them into dark pools, where I believe they put them in categories and defeat bullish pressure by having thousands if not millions of orders at a time and combine them into a single order to defeat the bullish pressure that would arise from the sheer volume of buy orders. I went into much detail regarding this a little while ago after I had a talk with a really cool guy that goes by Wired on Twitter. Now, we know that many people started taking action into their own hands and started switching brokers in order to direct orders directly to regulated and lit markets. That way the manipulation coming from hedge funds would be diminished as many individual investors continue to buy stocks. Something interesting has happened upon switching to brokers in order to up our strategies. The systems in exchanges are currently experiencing a ton of odd lot orders from traders. Due to the fact that most retail traders buy in chunks of less than 99 shares, since we ain't rich like our boy Kenny, it would make sense that a lot of algorithms in the market in general are automatically having the prices of GameStop and AMC fall by sending a ton of sell orders. Now, do not get me wrong. I am not saying all these institutions are selling. What is most likely happening is that they are spoofing, or playing games with the algorithm. They feign interest in trading GME and AMC by creating the illusion of a sell-off by placing orders but then immediately canceling them before they get fulfilled. That way they create a ton of negative weight on the price. They are leveraging algorithms all across the market and front-running, even when some of these things are illegal, in order to defeat the price. So, let's bring it all back now. People got a bit of self-awareness in the market and decided to switch brokers to direct orders to lit markets to make sure naked shares are decreased and that they get legitimate shares, and could pose another challenge to hedge funds and the rest of the shorters. Doing so has had some unintended consequences, but this isn't a bad thing. The price of GME and AMC was always going to fall anyway. The act of changing brokers was still incredibly smart and astute. What is simply happening is that we got away from payment for order flow, which combined a lot of our odd lot orders to make full round orders. By switching our strategy, we now are encountering a different type of manipulation by which trading systems, according to the odd lot theory, are placing orders against what retail does because they can know exactly that retail is more present because institutions buy in full round orders because they only big time, not 1 or 2 stocks a day like some of us do. As such, we know hedge funds and other members trade using automated systems and not people, and these systems read the room very well, and are implementing a ton of strategies like spoofing or front-running in order to defeat the price. They are playing against retail. They place orders to trick the computer systems on exchanges to think there is a lot more stock than buyers, decreasing the price. Is this a big deal? The answer is a big fat no. Keep on buying, keep on holding, as this changes absolutely nothing. Now that the price is falling, it is a great time to buy some extra tendies so we can have larger collection of Lambos. Guys, let's get serious for a moment. There is no place on the market that hedge funds don't manipulate to a degree. These are companies that handle trillions of dollars in assets, so to think we will outsmart them in any specific type of trade is goofy. They have trained experts with decades of expertise. They employ thousands of people to think of every possibility to get the advantage on retail, and even then, they are losing. The strategy is the same: buy and hold and take advantage of every dip. However, do not get unmotivated because things are happening how you thought they would. We were never going to experience a sudden wave or surge on GME and AMC by switching brokers and redirecting trades, and that is totally fine. I personally think switching brokers has been one of the best things that have happened in the community, as the benefits of redirecting orders in exchange markets has posed a significant challenge to hedge funds in other ways we have discussed before. I think we are consolidating more often now, and the support walls are getting stronger overall based on what I have seen. Buy and hold and stay with whatever broker you feel most comfortable with, unless it is Robinhood. If you are still trading with Robing the Hood app, you are taking a big fat L. I hope this explanation was clear and to the point and made sense to you guys. Let me know in the comments if you feel you learned something useful and if it made sense to you personally. Let me know if you liked the video or if I made it too complicated. And with that, I want to thank you all for making it to the end of the video. I really appreciate you all being here. Thank you all so much for the love and support you have shown this channel. Big shout out to all my Patreon supporters and one-time donators. You guys are the absolute heroes of this channel, and I will never have enough words to thank you all. With all that said, thank you and see you tomorrow for a brief little video. To the moon.